Today we have Signature Global coming on this show. Give us some background. Talk to us about what the numbers were like, what the expectations were like. Try and set the context before we go to and speak with the management.
Absolutely, Harsh. So if you look at Signature Global, the company has been in the NCR region, that's your National Capital Region, the focus has remained there on the affordable and the lower mid-segment housing segment. Now, if you had to look at the company's market share over there, that remains about 19% in the affordable side. Again, quite a strong set of numbers if you have to look at the Q4 and FY24 performance of the company. Now, the company's Q4 pre-sales has gone up by about 240% at like 4,140 crore, while the FY24 pre-sales number have surged about 112%. While moving on to collections, the Q4 collections have also reported a strong growth over here, about 72% in the quarter itself, while in the annual figure, if you look at about 62% of growth here. Coming to the net debt of the company, the net debt has more or less remained in the similar range, about 1,160 crore compared to about 1,090 crore in FY23, while the company does attribute it to the increase in land acquisitions they have made over the course of this one-year fiscal, if you are looking at. Now, again, one significant point that I want to make over here, Harsh, is the FY24 guidance that the company has quite significantly exceeded about 4,500 crore of pre-sales guidance, which they have now clocked in about 7,270 crores in FY24 end itself.
Sure. Anushi, we have Mr. Rajat Kathuria with us, who's the CEO at Signature Global. Why don't you take the first question? Go for it.
Absolutely. Hello and welcome, Mr. Rajat Kathuria. So, quite a strong set of numbers if you have to look at Signature Global over here. Both the pre-sales and collections, as we spoke about earlier, have surpassed the annual guidance that you had stated. Now, I want to understand from you what is your perspective on this kind of guidance that we have exceeded? What has led to this? Is this because of the premium side of the project that we had launched ahead? Is that one of the reasons, and can you share more on this?
So Anushi, thanks for inviting us to the show. So see, it's a bit of a sustained trend. If you look at the last 3-4 years, to the extent we are launching inventory, it is being consumed. We try to, come up with inventory which is well, accepted, the product which the customer wants. But by and large, this is like a standard trend, you come up with certain inventory and it gets absorbed. So what it showcases is that, there's huge supply constraint in the market. Still the levels of supply is not meeting the kind of demand which, the sector is witnessing. And likewise for us, we came up with more supply in the previous year and hence it got consumed, at a good pace. So that's the primary reason, and it's the same factor, over the last 3 to 4 years.
Right. So Mr. Kathuria, Harsh also joining in. I want to try and understand. So is this front-ending some of the demand, some of the expectations of FY25 into FY24? Is that what is happening? Or is this a base for growth for FY25?
Harsh, it's definitely not the former situation. It's a matter of, what supply you create and how soon it gets absorbed. So if you look at the previous year, the first 3 quarters, we did not come up with any new launch. But in the last quarter, we came up with a 2.7 million square foot launch, which yielded us about 3,600 odd crores of pre-sales. During the current financial year, we intend to come up with launches of almost close to about 15,000 odd crores. But, on a consistent basis, we'll spread up the supply, starting from the first quarter of the financial year itself. So, we are fairly positive on, pre-sales growth during the current financial year as well.
So more onto this pre-sale side, you mentioned that you're fairly confident on this growth trajectory going forward. But over here in the pre-sales also, if I want to look at one particular segment, that is your recent foray into the premium housing, what is the kind of, are we expecting more of these launches going forward in FY25 as well? Because if we have to look at the realizations also, they have gone up significantly, about 11,000 of a mark over here compared to about what we had clocked in just about 2-3 fiscals ago, which was at about 4,000 marks. So can you share more on this also?
Sure. So see, you're absolutely right. About a couple of years ago, that per square foot realization used to be around 4,000 rupee mark. Around that time, we used to focus a lot on affordable housing, and we had started foraying into mid-income homes. Over the last couple of years, the land prices have gone up, and doing affordable housing, our affordable housing math is not stacking up as it used to be. Hence, we started focusing more on, or rather only on mid-income homes. The reason why per square feet realization has gone up is also because, we've entered into, you could say, either premium housing or, the upper end of the middle income homes, whichever, terminology you want to use. And that's one of the primary factor why, the per square foot realization has gone up vis-a-vis the previous year, which was closer to about 8,000 rupees a foot.
Okay, and therefore, just a quick follow-up. Scope for expansion from here in terms of realizations?
See, we have fairly good land inventory, Harsh, and it has come at a, we've created that land inventory at a fairly compelling, price. All these price rises are generally, market driven, so we want to always keep product which is a value buy for the customer. So we don't want to beat the market trend. If the market goes up from here, we'll kind of follow it. But if it doesn't go up, we are very happy doing more volumes than try to, seek value increases.
And sure, point taken, Mr. Kathuria. Also, with regard to pre-sales, you've suggested around 15,000 odd crore of launches, if I'm not wrong. So where, therefore, would your numbers stack up in terms of guidance for FY25?
So if you look at our sales CAGR for the last, 3 to 4 years, it's kind of, crossing the 60% mark. For the current financial year, while we are fairly comfortable, giving a guidance even at this level of about 25 to 30%. So, it should be around that 9,500 odd rupee mark of guidance, which we'll probably roll out in some time.
Just on that, since you have a strong launch pipeline going forward for the next 2 fiscals, the debt has more or less remained in the similar level. Can we expect this to sustain at a similar level going forward as well, or do we see some kind of a decline now on this number?
We'll see a decline, in this financial year. Last year, we raised about 600 plus crores through primary issuance. And, when we collected about 3,100 odd crores through operating cash flows, that also created like reasonable operating surplus. So a lot of that capital has gone into land acquisition. We've added about 15 million plus square foot, area in Sector 71, which is the southern peripheral road in Gurgaon and quite a prime region. But, we anticipate lesser acquisition in the coming year. And hence, the debt number will go down significantly over the next 12 months.
Quantify that number for us?
It's a little premature to do that, but it will. See, the debt levels are quite, are not so high. The net debt is just 1,100 odd crores for, the current levels. It doesn't seem very high, but, they'll go down significantly. There'll be, the net debt by the end of the coming year could be below 500 odd crores as well.
Sure, you're also indicating a lower capex in terms of land purchases going into FY25. How would development progress on some of the capex that you're making or you've made in Q4?
So see, we last year sold about 6 million plus square foot of area. As of today, we have land inventory, which is close to 30 million odd square foot. So even if we were to achieve volume growth in years to come, we have a couple of years of, land inventory with us. So it will not be financially prudent to keep investing into land at the same pace, as we are selling. It is, there'll be replenishments will happen. But, we see it lesser than previous year. And that's why I'm confident that, the debt numbers should go down in the quarters to come.
Okay, excellent. So lots of takeaways. Thank you so much, Mr. Kathuria, for joining us and giving us all of that perspective. It's good speaking with you. and hope to chat with you once the Q4 numbers are out. Of course, Signature Global up and away in trade, but I want to quickly also thank Anushi, who joined us for this one. Thanks, Anushi, for helping us break some of those numbers down.